Life and Lifestyle here. Another market recap for Friday, September the 3rd, round 30. Decided to play a little Kenny Rogers. Know when to hold him and know when to fold him. I'm going to stick with the Western theme because today was a Wild West market for your boy. I'm not very proud of my performance for the day. The title of this episode will be Failure to Plan is Planning to Fail. So you guys know the drill. I'm going to go through the watch list, what triggered, what hit targets, what died, and the overall thought process with every trade I took. First thing first, you would like to learn from who I learned from. We each have the stock market playlist, 30 resources for $30. Check out the merch. I have the Life and Lifestyle hoodies, shirts, and tank tops. I should have opened this in a new window so it'll pop up. Shirts. And I also have tank tops. Check them out. Support the brand. Check me out on Instagram for all of your fitness and finance information. And check me out on Twitter. All right. So what happened today? I got to bed late and I woke up late. And by me waking up late, my entire day's schedule was thrown off. Because see, I like to hit the gym in the morning. So I came back from the gym late because I left for the gym late. So when I get back from the gym, I had 5 minutes to set up everything before the market opened. And that just wasn't a good scenario. A lot of my trades, some of my trades I'm not necessarily disappointed in because I played them properly. I'm going to add a new element to my trading to account for that type of market. But 3 of my trades, I am very, very ashamed of myself with how I played those out. Because I could have easily doubled or tripled the profits I made off of those trades had I just thought a little bit better. But I won't put that 100% on... Well, no, I will put that 100% on me. But I will say it wasn't necessarily because I didn't trade properly. It's just I was rushing. I didn't have the time to prepare myself for the trade to play out like it did. And I played it wrong. And by me playing it wrong, I missed out on a lot of profits. I actually had to restart this video because I had already erased some of the charts because I was done with it. But I forgot I had to film first. So today's watch list, as you can see, was pretty extensive. There was about 17 trades I was looking at with 6 focuses with an additional 10 from previous watch lists. And yeah, we'll show you how it went. So Apple, let me make sure this is sitting right. There we go. Let me just hold it right there. All right, so Apple was a choppy trade. Matter of fact, let me add one thing to Apple I didn't add. So you can see something. I need to add it to another trade as well. I'm doing all this stuff live. So Apple was a bad trade because was that it? No, it was closer than that. It was here. There we go. Yeah, there we go. Apple was a bad trade because of that line. You see that white line right there? That's the broadening formation. The broadening formation lets you know that the range of the stock is done. You can see on the monthly, Apple usually trades within that range. So when it hits the top, it's more than likely going to come down. And the top was 155, which is what it hit yesterday. Actually, no, 2 days ago it hit it. It popped up, came right back down. I watched it for the second day. It wasn't doing much. And so for the third day, I was like, you know what? Let me give it a shot. I hopped in around here. because the volatility had already dropped, so it was cheaper. So I got in at the original price I wanted to get in, which was 33. Because before it ran from 35 to 55, which is over 50%. So I was like, well, it has the legs to do that. Let me hop in. So I hopped into Apple, and Apple just traded sideways all day long. Now my normal strategy is if it breaks below a certain line, get out of there. So let me switch. This is a 15-minute chart. So if Apple broke below here, wait, did I do the thing? If Apple broke below here, I would get out. And as you see, it never did. So I ended up just losing profit throughout the day. It just slowly just drained away. I was never really in a negative. Apple just kept fighting between 153.75 and 154.15. It just kept bouncing up and down and up and down and up and down. And I had a 165 call. So it bouncing up and down is not good for my call. So I ended up just losing percentages over time. And then Apple started to go up, and I put a level down, and it finally hit beneath it, and I got out. I lost 21% on Apple. Now, a tweak I'm going to add going forward with my trading is I'm going to automatically put a 10% stop into my trade when I open it. So even if it doesn't hit the line for me to sell out, I won't lose profits just watching it trade sideways. I need movement. And if it's not going to move, it's just going to close me out. So the market itself will be like, hey, get out of there. It's not doing nothing for you. Because that happened with a couple of my trades. They just traded sideways and I should have just got out. But they didn't break my line, so I just held them. But they never did anything. McDonald's. McDonald's is my worst trade of today. Actually, no. It's not my worst trade today. It's my dumbest trade of the day because I took it 3 times. If you guys remember from yesterday, McDonald's, I think I had bought McDonald's overnight, actually. I don't remember how I did that. I'm not sure. Anyway, McDonald's, the true call, 250 calls at 238.92. So it popped on the first day. I think I missed this move. I don't remember. I don't know if I caught anything. No, I never got anything on McDonald's. So I was watching McDonald's and it didn't do much. It fell down here. So I had got into it right around here, looking for it to repeat what it did the night before. Because McDonald's had popped the night before up to 240. And I was like, okay, cool. I'm going to see what it does in the morning. It died in the morning. So I'm like, okay, it's going to rebound to bounce back up. Go to the 15 minute. Matter of fact, let me go to a 2-day 15 minute. Here we go. Okay, so this is Apple yesterday. Apple did a little bit of running, not much, not much. I think I got out of Apple yesterday for a small loss. Yeah, I lost $5 on Apple yesterday from 20 to 19 because of this. So today I was like, let me give it another shot. So I get into Apple right around here. It goes up. It doesn't do much. I was following it around here. And I got out of the first one for a 2% loss. No big deal. I lost $1. Big whoop. I should have left it alone then. Because then McDonald's decided to go down like this. And then it started to reverse back up. So around here, I got in at Apple again. I was like, okay, let me get in Apple. Let me see what it does. And as you see, it went right back down and died a second time. No, wait, no, here it was over here. I had bought this at 22. Yeah, I bought Apple overnight. Yeah, I bought Apple overnight to take advantage of this run up. Then it died in the morning, and I got out down here for 18% loss from 22 to 18. That's strike one. So the Apple's way down here. So I'm looking at Apple for a put now. I'm like, okay, the put side is a little bit lower than this, so maybe Apple's just going to be dead today. Then Apple completely reverses. I mean, a full, strong reversal. Strong reversal to the upside. So I said, okay, Apple, let's see what you got. I hop in Apple again. I get an Apple right here. Doesn't do much. I get chopped out again, $2. So I lost $4 here and $1 here. So I'm $5 down. All right, no big deal. All right, Apple's going down. Apple dies. It reverses again. So I get in the Apple down here. I'm like, okay, Apple's even cheaper. Let me get it cheaper, ride it back to where I got it before, get my money back, and then take advantage of the move. So I get into it a third time, and it just reverses and dies again. So I say, you know what? Not Apple. I was talking about Apple. I said, you know what? McDonald's, you can kiss my ass. So I let go of McDonald's, and as you see, McDonald's did run a little bit. I kept an eye on it. It almost hit new highs at 240, but McDonald's doesn't want to go past 240. They got a lawsuit about the ice cream machine. That's probably not going to do much. They're hiring 14-year-olds because they can't get any workers because they don't want to pay nobody. That's why they can't get no workers. And it was just a bad trade. I just shouldn't have played this company. I was remembering companies like Starbucks and Airbnb. Like, I was like, okay, if I keep an eye on it, I can catch it and take advantage of that several 100% move, like the one I missed on Microsoft and Starbucks. But instead, I just got chopped up. So this one just cut me all to pieces there. XLF. I took XLF as a put down here. I got in around this part. It was a $37 put. It was $18. And I just watched it. I just watched XLF go down and down and down. But it didn't go down far enough. The volatility was low and the movement was low. So XLF didn't really do much. I think I might have been up 50 cents on the trade every now and again. Like, I don't even think it went past $19 once. So the trade wasn't doing anything for me. But XLF has so much volume to the downside, I said, let me just keep an eye on it. So I kept an eye on it. I increased my position on the secondary account. And right after I did that, what happens? It reverses up. So I get out for $16 for an 11% loss. And XLF wasn't necessarily a bad trade. I just guess I got in late. I probably should have got in. Let me go to the 15 minute. For XLF, I probably should have got in around here to the downside. And I would have got more movement. But by the time I got into it down here, all the movement had already happened. That was a late trade. AbbVie, I jumped into AbbVie for a long-term swing. I got an October call. AbbVie recently just died because of a FDA. The FDA said one of their drugs needs more testing or something like that. As you see, it went from 120 to 106. They literally did just a super death. Wish I would have caught that death. I would have loved it. I was watching AbbVie for a call. I wasn't watching for a put because there was no volume. But boy, that would have been a beautiful put. Better than Visa. It would have been a beautiful put to catch this because no one would have thought this would have happened. But I didn't catch it, so I was watching it. And a lot of people are saying that the reason they fell like that is because people just panicked. Whiskey. So if that's the case, then they'll be back to 120 soon. So I got a 120 call for October for $50, and I'm gonna just swing it long term. I'm gonna give it at least probably 2 or 3 weeks, or if it hits my stop loss. I still need to have stop losses in place so I don't lose any money like that. So I guess if it's a long term swing, I'll do a 30% stop loss. So I'm risking $15 to make maybe 50. HPQ. HPQ was another trade that just traded sideways. I got into the call right around here for $36. It went up and down and up and down. It never got below, I think it was 29.80, I think was the number I had put. Let me see. Yeah, it never got below this line once I got in around here. It just kept going up. No, I think it was around here. It just kept trading sideways and sideways and sideways. So divinely, I just got out of it. I said, you know what, I'm out. It went up a little bit. It started to reverse. I got out for a 11% loss from 36 to 32. And it even ran a little bit after that, but the volume was so low, it didn't even go up anymore. See, that's showing me that even if I would have stayed in the trade, I would have still been down 10% regardless, just because there was nobody there to make the trade work. There was no volume there. So when that happens, just get out of it. So that's where having an automatic 10% stop loss to save me sometimes, because sometimes it'll just be, I'm like, oh, there's nothing happening, and the computer will be like, just get out of there, just get out. It's not worth the time. Space is one that I executed poorly. I really did. Space $20 put was at $25.75. You remember yesterday, after a beautiful execution on Space, I had a shitty one. Yesterday I caught Space all the way up here, and I got out right around here for 100% option play. Beautiful trade. I was so proud of myself for that. Best trade of the day yesterday. And so today, Space decided to completely reverse. Now, had I had the forethought, I should have shorted Space right here around 28, and I could have took advantage of this entire move. Had I done that, I think the puts I was looking at were about $8, so I would have got maybe 300% had I just got it right up here and wrote it down. But that's something you learn as you get better and better with the strat. You'll learn how to focus on a reversal, see it coming, and just ride it down. I think I did that with one company before. I think I did that with Neo. I rolled Neo to the put side, then I rolled it to the call side the next day. And I did it at Microsoft as well, but I tried to do it with Space and I didn't do it right. What happened was I got in around here, right as it started, because Space had some news that they were being grounded by the aviation people because of something's wrong with the paperwork or something like that. They're not doing something right. So they're going to be shorted. And of course, when that happens, everyone panics and they start to sell. So Space starts to die. Hop into a $20 Space put right here. And I had a stop loss. Let me see, what's the high on that? 25. I had a stop loss pretty high up. Actually, it might have been right here. Yeah, I think it was around 25 something. I had a stop loss. And it came up and hit it. I was worried Space was going to reverse to the upside like it did yesterday. I'm like, a Space has the potential to run and run fast. So I got to get out quickly, or else I can mess around and get caught in it going up, and I'd lose everything I had. So I sold quickly for a $1 loss. I lost 2%. And then Space, I think I sold out around here actually. So let me move this down. Let's move this down to 25.10. Yeah, that seems about right. So I sold that around there. Space started to go to the upside. I said, all right, maybe I can catch a call on Space. Then it turned back. And by the time I was able to get back in, it was already up over 30%. Now, the only reason I took the trade after it was up over 30%, because normally if it's up more than 20%, I don't want to take the trade. I got into it mostly because I felt like Space could really go all the way down. If you see, let me pull it up over here. SPCE. You see over here, Space has been as low as 14.15 with a steady base around 17.18. So I felt like Space could easily go below 20. Even today, or even tomorrow, Tuesday, I felt Space would go below 20 based off of how many people are mad at Space right now. So I hopped in to take advantage of the secondary move. It was already down 30%. And I was like, well, it's probably going to go to 100%, so let me catch that second wave. Hopped in, had a stop loss at $24. Space went to 23.82, reversed. The level 2 was showing it was coming up. I got out right around 24.10 for a $3 loss, so I lost 11% on that. And then just Space is just doing that. So see, that trade wasn't that bad. The Space trade, the HPQ trade, and the XLF trade weren't that bad. The McDonald's trade and the Apple trade were bad. I shouldn't have played Apple because of the Bryan formation. That was stupid. And I shouldn't have played McDonald's just because I just shouldn't have played McDonald's. McDonald's just wasn't a smart move in general. Riot, I did not take this one. $6 put. It went up about 10%. It was a very slow mover. Riot is dying on the other hand, while their comparison company, Mara, is going crazy. Funny thing, I had a $35 call on Mara marked on the 20th. So a week ago, I had a call on Mara marked. A 35 call for 70 bucks. You want to know how much that call is worth now? Let's take a trip down memory lane and look at something. $35 call. It is now worth $880. We'll just say 900 bucks. So from 70 bucks to $900. And what happened? I missed it. Why did I miss it? Because I wasn't watching Mara. This is one of my biggest trades that got away. This is just as bad as when Pfizer got away from me because I wasn't watching it. It's just as bad as when Microsoft got away from me because I wasn't watching it, or Starbucks or Netflix. I'm catching them, so I'm not as mad as I normally would be, because normally I would just see these after they happen and be like, how come I couldn't catch it? I'm catching them, but I'm not paying attention. I need to add extra elements to my trading to let me know to keep an eye on certain stocks. Because if I would have saw this coming, I could have probably got this trade for maybe $100 around here off of the volatility, and I've been up 700%. I mean, come on. Fisker. I took Fisker from the night before at 39 bucks because I thought Fisker was going to run in the morning because of the way it closed. You see the way it closed? Yeah, I got into it right around here. It looked like it was going up, but it wasn't. Matter of fact, let me do the 2-day, 30 minutes. You can see better. Yeah, right here. I got into Fisker right around here because I thought it was going to go up, gap up in the morning, and open up around 14, 15. Because there was a call sweep for $15 on Fisker that I was looking for. Didn't happen. Fisker woke up in the morning and just died. So I learned from this one was, because I gave it some time. I was like, let me give it a minute or two before I panic and get out of there. And Fisker kept on going down. So I lost 20% on Fisker. One of my worst losses. I lost 20% on Fisker from 39 to 11. I already said ride. Did I do ride twice? Huh, okay. Clover Health. This is my worst trade of the day. You remember I got into the Clove call yesterday right around here. I got it for 12 bucks. So, as you see in the pre-market, Clove ran up. Clove was up over 9 bucks in the pre-market. So Clove opens up. Clove opens at 9.16 and then proceeds to go up. What I should have done was I should have had a get out right there at 9.10. I should have had a get out at 9.10 or up here at 9.30. So this section here is where I should have sold it. It was up from $12 to $30. It was up 150% from the night before. And what did I do? I diamond handed, baby. Because I put a mark down here. I said, well, let me use the previous stop loss. And if it breaks that point, let me get out. So what happened? Went from 150% to, it went actually to 167% up here. It went from 167 to 150 to 130 to 110 to 100 to 95 to 85, 75, 65, 55. And I sold it down here for 50% profit. So I basically gave up 100% in profit. Because I bought them for 12. I gave up $12 of profit to sell it for 18. Why? I don't know why. That was a very stupid way of trading. that trade could have easily gone from 60 to 150, but instead it went from 60 to 90, which is still a good trade, but it's not good enough. That was just a horrible execution. I will blame that on me not having enough time to prepare if I had to play this trade. Had I had another 10 minutes, had I been at this computer by 9 o'clock instead of 9:25, I would have noticed this, remember my rules, set a stop. Let's see, this opened at 9:28. So let's say I set a stop at 9:20, opening up. So it opens. So I got to stop at 9:20. Actually, no, matter of fact, 9:04. My kickoff stop would have been $9. Get out at $9. It opens at 9:16 and goes up. So now I would have moved my stop up probably to where it opened at. So I would have moved it up here. And then I probably would have got out around here. So I probably would have caught maybe not 160+%. I would have caught at least maybe 130, 140% instead of 50. But that's my fault. I didn't prepare properly, executed the trade poorly, left a lot of profit burn in front of me. SDC did the same thing with SDC. Now SDC was a YOLO I got from a chat room I was in, and I got four $5 calls. No, I got four $6 calls for $5 right around here, just to see what they were gonna do. Now right here it had ran up to 15 bucks. I didn't sell because I wasn't watching. That's on me. And so the next morning, SDC pops open. It pops up. It's around 10 bucks here. I'm up 100%. And then up here, it was up to, let me put it right at 6 bucks. Up here at 6 bucks, it was at $17. So that's over 200% profit. I sold one right here at 12 bucks for 440% profit. I should have had at least two to get back all my money, but I wasn't thinking. I was being greedy, and I was thinking about clothes too much. So I ended up letting the SDC die, and the rest of them expired. So I lost 8 bucks on this trade, but I really lost, let me think, I really lost $85 on this trade. No, I'm gonna say $70 because I got back 12. So I lost $70+ on this trade just by not executing properly. So between this trade and this trade, I could have easily had over $200 profit. Instead, I just got like, what, 50 bucks? I've done this before, and I won't say I'm reverting to my old trading style. I would just say that I didn't mark my levels properly, and I didn't have enough time to have a game plan. I just jumped into it, and I shouldn't have did that. It probably would have been smarter for me to cut the gym 30 minutes early just for this, but I was like, I got to get this workout done, and that's my fault. I can't blame anybody but myself. And Marvel, MRVL, I was watching this one. $65 call popped in the morning. It went from 25 to 35, I think. And then it kind of died after that. I didn't take that one. And Mal is a October swing as well. I got into it around here. $5 call for 50 bucks. And it ran, no, $7.50 call for 50 bucks. And it ran up here for like 40% profit, but I didn't sell. Because it has, based off of the stuff the guy was saying, it's going to go a lot further than that. So I was like, let me not sell it. But had I known it was going to do this, what I should have did was went up here, sold it for 35%, let it come back down, bought it again, and then already had that money pocketed. I'll start to add that style of trading going forward where I just take the profits and try to get back in later. Because me letting profits go is not going to help me out either. So that's that. So what did I learn today? I learned that you have to give yourself enough time to prepare for the market. You have to have a plan to execute it properly. You have to give yourself time to pick your next move. Yesterday I had all of that, and you saw what I did. I had a beautiful trading day. I had enough time to get 100% on space. I had enough time to get 40% on lift, 20+% on Neo. I'm just watching and hitting and hitting and hitting. Today I had no time to prepare, and what happened? I lose $100 on this trade worth of profit. I lose $80 on this trade worth of profit. I lose $20 on this trade chasing it all day long. It's a what's the word? It's a polar opposite from one day to the next. But I'm still getting better, and I know I can get this right. So what will I be changing going forward? Going forward, I will be adding an automatic 10% stop to account for time decay going against me. I will be marking my levels in the pre-market as well as the current market, because that's what happened with SDC and Clove. I didn't mark my levels in the pre-market. So any trade I'm taking overnight, I need to mark my levels in the pre-market to know should I get out or not. If I'm starting a new trading day, I need to start focusing the day on the trades I'm already active in and nothing else. I took a glimpse at Clove, SDC, and Pfizer. I closed, not Pfizer, FSR, Fisker. I closed FSR and I stopped watching SDC because I was watching Clove. That was not smart. I should have been keeping my eye on everything. So another thing I will learn is don't watch too many charts. As I pick my trades for the day, I start to diminish this chart until it looks like this chart. Each trade I go in gets added to this, and once I have more than 3 trades, I stop watching these altogether because they'll distract me. Then I'll play these out, and if these start to close out, then I'll come back to these charts to see if anything's starting to set up again. So I got to make sure to be a little more selective with my focus. So that's what I picked up on today. It was a Wild West day, to say the least. I thank you guys for watching. And everyone have a safe and happy Labor Day weekend. I will be doing some charting. I'll be catching up on all my weekly recaps. I have like 3 weeks of recaps to film. And I'll also be prepping for next week. So, you guys have a good one. Stay safe out there. I'm going to keep talking for 8 seconds. So it says 33:33. 3 seconds. All right. You guys have a good one.